Japan's largest gold dealer, Tanaka Precious Metals, has announced major changes to its gold investment services. Starting this December, customers will no longer be allowed to withdraw gold by flexible weight. Instead, only fixed bar sizes will be permitted, and all account cancellations will settle in cash. No more automatic bullion delivery.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the Gold Fix Market Rundown. What's today? Wednesday the 23rd, and I'm going to pause this and take a drink. Hold on. There's the home page. Bunch of stories, more news than you can keep up with now in precious metals. Some of it good, some of it bad, mostly very good. We're going to talk about the one front and center there. The future is precious. That's a logo of Tanaka, Japan's largest precious metals retail dealer, largest refiner of gold. They're the largest in pretty much everything in Japan in this area. And they sent out a notice to clients, and they're changing their policy, and the title is Breaking Japan's #1 Gold Dealer Restricts Physical and Moves to Cash Settlement. We're going to go through that a little bit here. We just sent that out in email. We do want to draw your attention to one other post. Top left-hand side, special gold trading comment for the short-term trading group in the audience, in the community, I should say. We gave some thoughts on where we think gold's going, how it's going to get there, and what to look out for if we're wrong. So, and an update on our position as well. All right, let's start with the markets. 10-year yields are unchanged bid. The dollar is 97.44. SP 500 is 63.34, up 25. The VIX is down 0.5% at 16. Gold down $3-4 at 34.27. Back and forth from basically up a couple bucks to down 10 bucks, I think. Silver, stronger, was tracking gold early in the session and now is kind of diverging. So silver is stronger, probably taking its, no, it's not taking its cue from platinum. Copper's up. There you go. 575, up 5 cents. WTI 65.91, natural gas 319, down 4. Bitcoin bouncing back and forth between 117,000 and 120,000. 120,000 is the new 100,000 that it can't break. Ethereum stealing its thunder, but it's down a little bit today, 36.82. Palladium up 3, platinum down 9, gold, silver softer, still can't break below 86. I think that's a good level right now. And grades are mixed, wheat is down. Looking at that board, the big news, the big fiscal and financial and monetary news yesterday was the deal with Japan. I'm sure people are trying to work their way through it. I haven't looked at it closely yet, except to say it's we tariff their stuff, they tariff our stuff, and they invest directly in the U.S. It's the direct investment that I focus on, meaning to the dollar concept. We want them to buy more of our stuff. And they say, okay, we'll do that. Make sure the dollar's weaker. So the dollar's got to get weaker. That's the Plaza 2.0 is a million bilateral deals one at a time. And the foreign direct investment, also known as FDI, is key. Saudi deal, foreign direct investment. UAE, foreign direct investment. China, not foreign direct investment. It's not a deal at all. But Japan, foreign direct investment. This is key to stabilizing our treasuries. Are they going to buy treasuries? Yeah. Are they going to buy companies? Yeah. How are they going to buy those companies? Probably stable coins. So you get the idea that they're going to buy our companies as we buy our bonds. The whole thing is moving around. It's actually pretty good. It's pretty good if you can tolerate the bubblicious concept behind it. Okay, so that's what's going on in the markets. You probably have to look at the yen today. If there's no movement in the markets that you're concerned with, say the yen or Japanese government bonds, I haven't looked at them yet, then that would mean that the market has already discounted it properly. My guess is it's inflationary for Japan. Their yields probably are higher, but their currency is probably stronger. I'm not sure. Well, I'm guessing. Let's move on. Okay, so the story you've all been waiting for. By the way, our title, it's a little bit sensational, but our title is Japan starts to nationalize its gold. All right, so we'll come back to why. That's our conclusion. Here's the news, okay? Japan's largest gold dealer, Tanaka Precious Metals, has announced major changes to its gold investment services. Starting this December, customers will no longer be allowed to withdraw gold by flexible weight. Instead, only fixed bar sizes will be permitted, and all account cancellations will settle in cash. No more automatic bullion delivery. Officially, the move is attributed to rising operational costs and logistics. But, this is our opinion now, given regional evidence of physical gold storage shortage, from halted bar sales in South Korea to China's surging demand for large institutional bars, Tanaka's explanation may be a pretense. As gold gets pulled off the market and repurposed as strategic collateral, smaller investors are being gated out. This shift hints at a broader trend. Physical gold is becoming scarce, and who can access it is quietly changing. Continuing, on its face, the rationale appears sound. Rising input costs and distribution challenges have affected industries globally. It's just part of the supply chain problem. But in the case of Tanaka, the explanation may obscure a more pressing reality. Structural changes of this magnitude, eliminating investor access to flexible bar sizes and removing direct settlement in bullion, point less to margin optimization and more to constraints in physical metal availability. We believe they're winding down, we note they are winding down a physical program while demand for their product is going for the roof. Who does that? Nobody does that. Either they're having a hard time getting it, or their supply is increasingly spoken for by a stealth buyer. Given their systemic importance and global reach, we're going with a stealth buyer. Now, before we go down that rabbit hole, or at least touch on that rabbit hole, how big is Tanaka? They're the biggest gold bullion retail, at least the research that I've done, biggest gold bullion retail sales in Japan, but they have global reach. They own metal ore. According to the information I looked up, they own metal ore in Switzerland. They have franchises, what's the word? Satellites in China, in Shanghai. They're everywhere. So on the surface of it, to say it's logistics, we're just trying to lower our costs. You own a refinery. To not use a refinery that you own is not lowering your cost. It's letting it sit idle. So you charge for the refinery and you re-refine. At least that's my take on it. So how would you explain it? Well, most people, most gold bugs, myself included, they're running out of gold, right? I thought that. Well, they're having a hard time getting gold. And then you back out and you go, oh my God, Tanaka's huge. And then you back out a little bit more and you say, well, what's going on regionally? And so we wrote this piece. Korea, we don't have any gold. Everyone's saying the same thing with different words. We don't have any gold bars anymore. China, we want all your gold bars. Latin America, we don't have any silver or gold. LBMA, sorry, we can't get it to you in 2 days. And now Japan, in their own way, is saying, we don't have as much gold as we used to available. We're streamlining for logistics. I think this is a way that you nationalize gold in a democracy, in a capitalistic democracy, by just buying it from the company. Now, you may buy it publicly, but why would you do that unless you have to buy more? where you just go to the company and say, we want 80% of your gold production, or we're going to be a buyer of this amount per month for the next 2 years. And so you got to take care of the bigger customer, right? Latin America, taking care of the bigger customer. The US, taking care of the bigger customer. Who's the bigger customer in the US? Well, the US is. So that's why we repatriated the gold. Anyway, so, uh, you know, the ghost of Zoltan Pozar, crisis of collateral. Well, here it is, right? It's a slow rolling short squeeze. Everyone's being very sexy about how they're doing it, but the world is running out of available gold. And China's buying it. China's doing a lot of underground buying now. They're not buying so publicly anymore. I think they've lost patience with the liquidity of the markets that they're in. Well, that's what happens after you break a market. Okay, so there you have it. That's what we think. The full analysis is in the premium post. Tanaka restricts gold delivery. I put it in the post as well, but a hat tip to Silverhand. I think maybe he's a customer. He has the original document. We took that document, we translated it as well, and a couple other people who alerted us to it. So thank you. I don't recall everyone's name off the top of my head. All right, so that's a big story, folks. That's the manifestation. That's the manifestation of the M word. My bullion is mine, right? Your bullion is mine unless you protect it. All right, related post, special gold trading comment. I mentioned that. Founders AM inflation targets are going to get moved. We believe inflation targets are going to get moved because we're seeing hints of it coming out of various unrelated areas tied to China's M1. It started with Simon White. China's M1 supply is getting bigger. And the best correlation out there for money supply is when we raise money supply, it doesn't really affect global prices so much. When China raises money supply, it does. And we think their money supply is growing. That's something for founders, we said. Fed Imposter buys gold, Fed Imposter buys gold video, and Goldfix PM, which had an update on the market. And there's the chat at the bottom. Next, coming soon. Well, we don't know what's going to come soon. It may come tomorrow, but we'll let you know. On deck, Pal spoke already. Today, existing home sales, which could have a surprise effect. It's 824 right now. Quick look at the chart. There's silver. We talked about in that gold technical. Yeah, we talked about gold a lot technically yesterday, so we're gonna leave it. I did say this yesterday, and I'm not married to this, but I put an alert there. Depth equals distance, or depth equals height. From here to here gets us 40.13. And I think that's the reason I have that alert there is because I may take profits on my longs, on my speculative longs. Right? You got to figure someone's going to sell it there the first time. But that's it. From here to here equals from here to there. And that's a conservative number. It could be a lot higher, but it should happen in a short period of time. And I said that 2 days ago. So here we are, 2 days later, marching along. And there's something in gold too to that effect, if I can remember. Let me rescale that. Yeah, so there's my line. I think there's a lot going on in this area. Yeah, there could be selling up here. I'm not sure, but I know they're selling at 3,500. There's a lot going on in this area. Um, uh, if you're a regression to the mean kind of guy, you're taking profits very soon. Or put it this way, you're taking profits now if you're a regression to the mean person. And I would take profits now if it wasn't for that. So hiding all this stuff here. Bollinger Bands say we're in day 2. And unless the market goes below, give or take 33.98, which makes sense, 3,400, dips will be bought. I don't think this is important, but it is lingering underneath it. So, let's see. That's not a level for me. It's probably a level for other people. All right. I'm Vince. Check us out in premium and on the website. I will catch you later.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.